Hey, what's up? What's going on, everybody? Welcome back to the Dapper Dividends Dividend Dive number 175. I think that's what we're going with. Dude, right off the hop, Andrew, congratulations, man. 100K. Is that dividend income or is that portfolio value worth? Whatever it is, if it's net worth, that's incredible. Charlie Munger always said the first 100K is the most, that's the hardest thing to get. You got to get the first 100K, but I don't know. I think that's should be inflation adjusted. I don't know when he said that you should do what, whatever year he said that, but whenever it was, baby, it's more now because of inflation, but not to rain on your parade, Andrew. That is fantastic. Congratulations. You can't have $1 million without 100,000, right? Public school educated here in Cook County in the state of Illinois. And I definitely know that $100,000 is inside of $1 million. So, right, that's the hard hitting analysis that you get right here on this channel. So, anybody else have any milestones you want to share? Feel free, put them in the chat. It's our time together. We'll do whatever you want. There's no plot to this. It's a situation. It starts with a guy in a chair doing a live stream. Where it goes from here, I don't know. I'm just a part of it. I'm along for the ride with you. You want to throw out some stock ideas. You want to ask bizarre questions. I don't know if maybe our friend Jorge will stop by because I sold Nexstar because of him. So it's only up a whole heck of a lot. So, I did not sell because of Jorge, although he was happy I did sell. So that ties into the video, what I did. And a few people took it the wrong way. They said, how can you doubt Warren Buffett and tell people not to buy UNH? And I'm like, did you even watch the video? Because I'm pretty sure I said, don't blindly follow Warren Buffett, Berkshire Hathaway, any investor into an investment without doing your own due diligence, developing your own conviction first. Build that foundation. So a couple people called me, I don't know, dumb. Don't know what I'm talking about. Just like, I don't know. Did you just look at the thumbnail? Because even then, for Christ's sake, I put caution. I didn't say don't buy UNH. I just said caution. Like, don't get all excited and buy. It's a nice vote of confidence, but don't run out and buy. Because also, if you didn't watch, no worries. I'm going to be just fine. My kids are still going to eat. They're not happy. They start school tomorrow. I have what will be a senior and a junior in high school. So that's a little weird for me. My oldest turns 18 in about 6 weeks. So I will be the parent of a legal adult. But anyway, forgot what I was saying. So let's see what you guys are doing. Not a lot of people in Vegas, Tony. I was reading an article that the situation is worsening there with the tourism, but we will be there in October 17th, 18th, 19th. We'll be there for the When We Were Young festival. I'm kind of hoping. I've been digging all the news about Vegas slowing down, but I'm not seeing any cheaper flights or hotels, but there he is, my guy, Craig. Buddy, I got to have you back on sometime soon. So I know I always say, we get busy, right? We get busy. Tony got out on UNH. Yeah, and back to, okay, well, it's alleged fraud, Tony. It's alleged. We don't know that. Obviously, I don't think there was fraud because Berkshire wouldn't buy in. Oh, the point I was going to make. Everybody's saying Warren Buffett bought, and that clues me in. Some people didn't watch the video because I explicitly said, unless it's stated publicly by Warren or Greg Abel or somebody from Berkshire, we don't know if Warren bought, Greg Abel bought, one of his lieutenants, Todd Combs or Ted Wexler bought. We don't know. So if it was a 100% Todd Combs pick, people are like, oh, Warren Buffett bought UNH. I'm going to buy UNH. And you could be following Todd Combs, right? And would you do that? I don't know. But that was my point. Don't blindly follow investors into investments. Have your own conviction, right? So, that's what some of the comments. I'm like, you know what? if I'm dumb for saying you should do your own due diligence before investing, oh, because of the example we shared, Ulta Beauty, right? What happened? Berkshire in Q2 24, they initiated a position in Ulta. Q3, they started scaling back. And in Q4 24, they completely exited. They were in it for about 2 quarters. And I remember it popped. It shot up like 11 or 14%, whatever it was. And people were saying, dude, Ulta Beauty, Warren bought Ulta. I'm buying Ulta. And it worked out on a total return basis. The S&P 500 went up about 12-ish percent. Ulta, I think, was 10.9, about 11%. So it underperformed by about 2%. But if you would have followed Berkshire out, at least when that 13F filing on Valentine's Day 2024 dropped, all that Ulta Beauty did is it went up about another 40% from where Berkshire exited. So that's all I'm saying. You don't know why they bought. You don't know their rationale. You don't know when they're going to exit. And, whatever. If it's a nice vote of confidence, I think it has a long way to go. I'm waiting on the sidelines. I'm not buying, but I want all of you to make money. So hopefully it continues its upward climb. The government doesn't impose any kind of, fines, or I don't know, maybe they slap their wrist. Who knows? I don't know. I don't want to speculate. So we'll see. Get your popcorn ready. Oh, Chris, you bought back before the announcement. Good on you. Good on you. I'll be interested to see what happens if we have some profit takers showing up and whatever. But this happens. This happens a lot. Every time it's noted that Berkshire buys something, the stock pops. But again, we don't know. And Warren has said that things have been bought and sold without his knowledge. Obviously, there's some positions, I'm sure, that are solely his, like Coke, American Express, probably, Bank of America might have been his sale. So what are you guys buying? Again, Andrew, 100K, man. Nice. I love seeing that. Yeah, Janice, hello, hello, hello. You remind me of the Three Stooges with the 3 hellos. 1,500 shares of SCHD this week. What up, JJ, man? That's stout. It's funny. I did an interview with Marcos Milla today, and he's been more of like a yield max proponent, right? A lot of stuff on that. And we talked about it. And it's funny because I mentioned that I think when things get hot, people don't fully understand what they're buying. And I think it was that way with SCHD. Like a year ago this time, everything SCHD did well. Everybody wanted SCHD. So know what you own. Again, right back to what I was saying. It's never going to hurt you to know as much about what you're buying or owning as possible. I can't see how that would be a bad thing. But apparently yours truly just sounds dumb. Somebody's comment was, bruh, you sound dumb. It's like, well, I guess, and I think I even said in the comment, I was like, well, I never claimed to be smart. I never said that, and I even said, I'm not a financial professional. So I guess I should preface that. These are just my thoughts being shared for entertainment purposes. And you guys entertain me as well. I love it. Tony, you look out for me in Vegas. Yeah, we'll see, man. I'm supposed to meet up with a friend of the channel, Jonah Weingarten, who's a symphonic power metal keyboard player. You guys might remember him. I think I called it Interview with a Rockstar Dividend Investor. So he's going to be there. And obviously I'm going to say hey to Ryan. And I don't know if, Adam Khan's going to be there. Whoever's there, I don't know. We'll put out the word. We'll gather somewhere for a little bit. And I hate making promises because we're in there for 2 days. It's going to be quick. I think we're going to fly in on Friday night and out Monday morning, I believe. I think that's what we're doing. No, yeah, we're flying in late Friday night and then out Monday morning. So, hey, between that time, I'm going to do something where we'll be in some public place. Whoever wants to stop by, you can, Warren copied you. I cannot deny that, Michael. Warren indeed may have copied you, but it also might have been Todd Combs. Not Ray Combs. Ray Combs was Family Feud, right? On the Game Show Network, he will live in infamy. Did Ray Combs die? UNH coming back to life. I don't know. It got a pop. It's still what? It's still down 50%. It's not, or almost 40 something. It's not down as much as it was. But yeah, if you guys want to look up any stocks, I don't know. We can just chat about whatever the hell you want. I'm here for you. We're here for each other. We'll keep it platonic though. Andrew, that was your portfolio value. Stout, man. Very stout. Back in the Navy, when people would accomplish something, we would say, Bravo Zulu shipmate. So Bravo Zulu shipmate, a very crisp salute to you, Andrew. I think that's, I saw the I there, QQQ. So that came up in our chat today that it's small. That's good. JEPQ, and I haven't done the math. You guys know you can go to dividendchannel.com and use the drip calculator. But when you look at JEPQ, right, which is income on the NASDAQ, on the Qs, right, and you compare it to the Qs, it underperforms almost any time frame on a total return basis. What are you plugging in there? Your what? The Nintendo Switch? Told you we should have invested in Nintendo. Sega, it does what Nintendo don't. Shout out if you were a kid of I was a kid of the 80s, teenager of the 90s, and I was a big fan of Sega Genesis. Super Nintendo Sega Genesis. I think that was the one and only Poet Laureate Biggie Smalls. I don't remember the song. It was never my thing, you know. I'm hair metal, glam rock, punk rock, a little bit of hardcore. So my hip hop knowledge extends to what was on the radio, and when I would hang out with extended friend groups, what people would be playing. So I remember bits and pieces of some of that stuff stuck in my files in my brain that haven't been deleted yet. Jeff Lovelace, what's up, man? I'm doing well. You're up there in Canada. the Ike, and I don't remember his brother from South Park, the Canadians with their heads that too funny. All right, Chris. So there we go. We get some buys here. Again, it's very helpful to see what you guys are buying and thinking. Buying Walmart, the S&P 500, VOO, Amazon, Visa, ASML, United Health, and CDNS, which that's Cadence, right? You were the one that brought up Cadence. Thanks, Janice. I appreciate that. And the whole genesis of it was that I know people get excited when we hear Berkshire bought something, and everybody assumes that it was Warren Buffett that bought it. But again, we don't know. It may have been. Rest in peace, Ray Combs. I used to enjoy watching Family Feud. Steve Harvey hosts it now, right? We just watch Family Feud. That's what we'll start doing. We'll turn this into nothing about it. No, we won't. Nothing about investing. People tune in and they're like, why is this guy watching Family Feud? All right, Patel. Wait, UNH before Buffett bought, you were DCAing, dollar cost averaging, I assume you meant. Other insurance stocks, Elevance Health, Humana, I don't remember CNC, I don't know SC. Nice, man. You hit me with some names I don't know. And some Eli Lilly and Novo. I said Whiskey Tango Foxtrot. What's up? Everybody's coming through, and I just need my other daughter. Yeah, they're excited about school. It's too cool for school. Anyway, sorry. My wife was here doing something with paperwork. In the Army, we said Whiskey Tango Foxtrot. Well, that's funny because, WTF, right? Yeah, Palantir, dude. Yeah. No, they don't pay a dividend. We will not look at Palantir. So help you God, Eddie. So we can look at the fundamentals, but I tried to understand what they did. I remember something that stuck in my mind was that they could be like the Lockheed Martin of cybersecurity defense for the government. But one thing I do know from, the myriad podcasts that I listen to is that companies are going to be really reluctant to cut spending on cyber defense. It would be crazy to leave yourself open, to leave a company vulnerable to cybersecurity, cyber defense, and or all that. Maybe I meant cybersecurity, cyber defense. That might be government, which Palantir might do both. Correct? Oh, dude, come on. Yeah, like I said, my daughters are going into their junior and senior year in high school. Pretty sure, pretty sure they've heard worse than WTF. But half the time, these kids walk around my house with the headphones on. So, kind of a fun thing. Like they get, they're like, "You're such an old man," because I'll just start yelling, "Fire! Fire! Get out!" like just to see what they'll do. Sometimes I don't think they hear me, which is a little bit concerning. So, Bill, you bought some treasuries, the 4-week T-bill, 10-year note, and the 30-year bond. Very funny you say that because I don't remember the number. And you also bought 1 share each of Chevron and Cisco. Cool. Chevron was also added by Berkshire too. Little itty bitty, teeny tiny piece. But I think if it's bills are something to do with under a year, is that right? And then if it's like 1 to 10 years, that's a note. And if it's over 10 years, it's a bond. Those numbers may be completely off, but look at it. And then there's Patel with the Juicy by Notorious Big. I'm going to have to listen to that song again because it's been a long time. You're not my buddy guy. You're not my guy friend. You're not my friend buddy. South Park humor there. I just saw Buddy Guy in that and thought, Buddy Guy, another Chicagoan, yeah. Jason D, what's up, man? Building out a position in VYMI, trying to add some international investments into the portfolio. Yeah, and I went the opposite way. That's a Vanguard's International Dividend Stock Paying Fund, right? I'm going SCHY, which, by the way, let me share with you real quick what I bought because I think I bought more. Here, I'll throw up my newsletter. But I want to do that because I was looking at the FUTs. The FUTs are slightly green. That's the word I'm looking for. But yeah, if you guys, this is the newsletter. It's free. I like to say it's fantabulous. Toot my own horn, right? I'm buying more ADC because Joey Agree was buying more. And that was my reason for buying way before 500 and what, 38? 538 days ago was the last time Joey Agree bought, and I bought shortly after that. But anyway, it was a little bit about that Agree Realty stuff. But let me get to the buys. Oh, here's my dividends. For those of you that may be visually impaired, $207.38. And again, this is just, I heard it. I'm trying to break that habit so hard. Those filler words, if you thinking of something to say, please, for the love of God, brain, no more stuff like that. But it'll happen. I'm trying to correct it and weed it out of my subconscious. AbbVie, $41, MLPX 40.15, Agree Realty, my monthly stocks hit. Now, Agree Realty, that's going to go up next month. And Realty Income, 61.87, is going to go down. By the way, Main Street Capital, another 38.25. So that's kind of cool. But why is Realty Income going down? Well, here's why. Because I sold a hundo of Realty Income at 58.05. Of course, it went up a little bit, but I immediately bought 53 shares. There it is of Agree Realty. And 40 more shares of Vici Properties at 32.66. So I got a bunch of cash sitting around in the accounts. It's so hard. I just wanted to say, so bad. So that's what I bought this week. It's funny, but it could still be influenced by Warren. But yes, and I know from listening to the shareholder meetings that somebody asked Warren about a REIT, and he had said that they owned a REIT once, but he didn't buy it. So that was like, oh, that's interesting, because he's admitting that, and we know, and later, stuff is bought and sold without Warren knowing. So he doesn't take care of everything. But yeah, and I'm planning on going to the next shareholders meeting. So I will be buying a share eventually. If the next bubble will be AI. And you know what it might be? And I've heard, people way smarter than I have said that companies are dumping so much money into AI that if we don't start seeing the returns of this massive inflow of money, it could hurt them. But the companies that it could help, and pay attention, are like your Coca-Colas, your PepsiCos, some of the companies that haven't been the high-flying tech stocks. Why? Because AI could make them more efficient. Thinking about Old Dominion Freight Line, these companies will be implementing AI to make them more efficient. And yes, it's kind of like the internet. Everybody got the internet, but the companies that were good, right, they got better with the internet, and the mediocre ones stayed mediocre. So I don't know what's going to happen, Janice. Again, just like Yogi Berra said, predictions are tough, especially those about the future. Steve, you're buying more General Mills, huh? What turns you on about General Mills? I mean, a big cereal guy? Oh, that's good. I love scotch. It's Anchorman, right? No, this is something new the missus bought called ginger turmeric herbal tea. We listened to an herbologist on Diary of a CEO. Boy, that almost sounded like a nasty, dirty word. I hope nobody's eating. But Stephen Bartlett, who hosts that, has some interesting guests. And it's very, very cool that sometimes you can get investing insights about things. And I'm going to steal this from Morgan Housel. If you listen to his podcast, please do. But there are things in areas of expertise, things in the world that if they're true in other fields, they will probably be true in investing. And Morgan Housel has said, you can learn a lot about investing from non-investing sources on, say, psychology, military history, evolution, you name it, whatever discipline there is, whatever field there is, if you read something on it, you can learn something about investing, and vice versa. Good, Bill. Thanks. I'm correct on the treasuries. Yeah, it was just a guess there. Yeah, I guess I didn't buy SCHY this week. And I know why I didn't, because I was happy buying in the 27s and now it keeps popping to the 28s. But I think it's a nice compliment. I know Ian, the one and only Ian Lopik. Oh, by the way, guys, I'm going to be getting to meet and be on how crazy is that? I'm going to share a stage with Ian Lopik here in the wonderful city of Chicago, Illinois. Because the fine folks at, I was going to say Brandon. I think I should say Brandon at Blossom asked me if I wanted to. And I said, for sure, man, of course. But, oh, you guys talking South Park? Yeah, I think they're taking a break. I read some headlines about that. AI might help the railroads. Interestingly, United. Oh my gosh, brain. UNP. Why can't I think of the name? Union Pacific. I was thinking United Parcels. I was like, oh no, that's UPS. That's the Brown. What Brown can do for you. So UNP, United Pacific, and Norfolk Southern, NSC, are trying to join forces. They're trying to become like Voltron and be, a bigger unit. Maybe more like the Blob. I don't know. That's probably a better analogy. At some point too. Cheers. Look at this. Is this sacrilegious? I got water in a Guinness glass. Don't hate. It's. It's not time yet. It's not time to put something else in the Guinness class. So they are trying to create the first true transcontinental railroad where they can own the whole thing from east to west coast. That'll be curious to see if it's allowed, if it goes through. Some people think that there's a lot of upgrades that have to be made, a lot of money that's going to be spent, and it could not be as synergistic or advantageous for those companies until some years later. So we'll have to see. But there she is, Lisa. Lisa, my apologies. I've been so bad with YouTube. I text Ryan. It's funny. I text Ryan all the time, and he knows that I don't think I've watched one of his videos in, I don't know, a couple weeks. I keep meaning to. I get the alert. I see it come up. I'm like, oh, I'll watch that in a minute. And then before I know it, 2 days has gone by. I don't know about that, Kevin. Are you looking on a total return basis? Because when I go to Seeking Alpha and I plug in on a total return, if you look at ADC, I don't know if you want to do it now. I mean, I want to run through it while you guys are on here, but it's outperformed Realty Income on a 1, 3, 5, and 10-year total return basis. It's outperformed Vici Properties, I believe, as well. And I'm not sure where if what you're looking at with that. I know I believe they've outperformed the REIT index, which that name escapes me right now. So let me know, because maybe I was doing something wrong, but I was seeing outperformance by Agree Realty. And I know you're seriously asking, Kevin. So it's everything. The company is growing. They've become stronger. They got a credit rating upgrade to A-. They're one of 13 companies that now is a publicly traded REIT with an A- or better. They have a very strong balance sheet. I like their lower cost of capital. The tenants, they stay focused in retail. They're not trying to expand into gaming or vertical farming, data centers, Europe, things like that. They play in a very specific sandbox, and they're trying to only grow within that sandbox, which I really enjoy. Joey Agree and the management team at Agree Realty. So, yeah, I don't know if you're looking at something different, Kevin, than I am, and I'd be happy to run through that. But we'll do news here. What are we at? 27. We'll do news here in a second. I'm almost to caught up. Dude, Jambi would be proud. Very, very proud of you saying Mekaleka hi, Mekahini ho for luck, but we don't want to use luck. As much as I love Jambi, and unfortunately Jambi did pass away a few years ago. But all right, you guys are talking Paramount. I'm going to have here. Let's do this, Kevin, because you got me, and you guys will run through this. Let me just pull up Seeking Alpha, and why not? Sit tight. Here we go. And then we'll jump into news. Kevin, I will show you. I'm going to make myself small first. I like to get in the shower and get really small. Sorry, I'm trying to make jokes that I heard a long time ago. And all right. I think you guys can see Seeking Alpha here. Ba-da-ba-ba-ba. There we go. It's on my phone now. Now I feel better. So here we go. We got Agree Realty. We'll do charting, and we'll select the symbols. For S&P 500, we'll just do VOO. We'll throw NNN group in there. We'll throw O, Realty Income. What is the what's the real estate VNQ? There it is. We'll throw VNQ in there. I think I can get 2 more. Who am I missing? Vici. Up to 7 symbols, and I'm on 6. I think that's a good spread. We get VNQ. Let me put Vici more up toward the top here. So that's a good swath. And then we'll do this. We will do metrics, XL price return, and we put in total return. Ba-da-ba-ba. So here we go. Over a 1 year, there's O at 3.52%, Vici at 8, and Agree at 5.52. We go out 3 years, we got O at negative 8%, VNQ at negative, basically flat, 0.33%. VOO, okay, that might be an unfair comparison, but for a baseline, okay, because that's actually pretty unfair to have VOO in there, but whatever, we'll leave it. Vici at 7, so that's been performing in ADC, so is outperformed O and V and Q. I think that's a good peer swath, and triple N REIT. 5 years, we have Agree at 30%, O at 24%. This is total return. VNQ at 32.6. Okay, it's keeping pace with VNQ. Triple N and VOO, of course, the big winner, and Vici at 84. So Vici, there you go. That's another reason. I think they have a lot of growth. And then over 10 years, we got ADC at 273%, and it is almost outperforming VOO at 289%. So there you go. 10-year total return, 273. O is at 101. VNQ at 72. Triple N 81. So that's pretty stout, and that's why I'm looking at and Max. That's not fair sometimes because not many can go back to the 90s. So obviously here, that is kind of funny. So if you can go back all the way, because I think they both went public the same year in 94, I believe. ADC 3,294%, O 3,273. So Kevin, going all the way back on a total return basis, it still beats those. So that's that. I expect it's a long term. I'm planning to hold it forever. And let me steer this. Look at that. Caught it. Here's the news that you can use, hopefully, from simplysafedividends.com. ES, electric utility company, Eversource Energy, raised that dividend. No, they didn't. They were dividend downgrade from 80 to 70. Safe. Go fast on these. Pause it if you want to read the little blurb. I know it's not the whole write-up, but we don't have time for that. Make up a fake email address. Get Simply Safe Dividends free for 2 weeks. You just have to give an email address. Dividend downgrade for the office REIT BXP. Gee, I can't say I'm surprised there. They refreshed their outlook on Altria, which is nutty that it's at almost $66 a share. Dividend downgrade for NSP Insperity. Rising health costs and weak hiring trends squeeze Insperity's payout ratio. And the market doesn't like it. Looks like they could be undervalued, but tread with caution for them. Dividend safety upgrade for Eaton Vance Limited Duration Income Fund, the multi-sector bond. Out of my wheelhouse. I don't know anything about this, but it was upgraded to 40 unsafe for whatever that's worth. And this was the last one. UTG, the Reeves Utility Income Fund. My friend Jeremy from the Dividend Stockpile. This is his sandbox. A lot of these closed-end funds and whatnot. Safety upgrade. So slow week there. Oh, and then Palantir. Eddie. I think it's nutty that the PE, I don't know if they'll show us here, the PE for Palantir, but I'm sure the metrics are all just, you're paying up for that growth. Free cash flow per share, climbing, stepping up. Crazy sales growth. Yeah, their metrics are great. There's diluting shareholders a little bit, but their sales are going skyrocketing upwards. Nice to see their ROIC, return on invested capital, positive. Return on equity is now positive. Good numbers. Yeah, it's free cash flow margin of 54%. Very strong business. No net debt, apparently, is what it says. But what is their, I don't see their PE here. And let's see here what the folks at Speaking Alpha have to say. There, some of the analysts, it's got a hold rating for everything. Yeah, valuation and F. Where's their PE? Come on, where is it? Oh, that's a little crazy. A PE of $273.04 for every $1 of Palantir's earnings is what you're paying. Man, they are priced to perfection. And we got a whole big mix here. Strong sell, strong buy. That's funny. A day apart, one analyst strong buy, one analyst strong sell. So sell, strong sell, buy, hold. All right. And I don't know what their price to sales is. Where's the ratios? Is it in the financials? Here we go. Price to enterprise value to sales. One. Yeah, everything's an F because they are just here, maybe a little easier. Where's price to sales? I thought it was here. Price to sales, 119.33. Some analysts think that a price to sales of over 20 is really, really expensive. So 120 is astronomical. Just everything is an F. I wouldn't touch it here. I mean, you are really, and I'd love to know all of your thoughts. I know it's not a dividend paying stock, but man, my thoughts on that is just, it's priced to perfection. The odds of it doing worse than better, I think, are high, but what do I know? Oh, iWire. Yeah, I was thinking of VNQ, but you're probably right. That's probably another one. If the data centers get built out, where another worry though is that if the chip manufacturers, if everything gets more efficient, if chips become smaller, they can store higher amounts of data. If they run cooler, that could affect some of the data centers. We won't need as much. We won't need as much of the electricity. Is the word we're going for. And that could be, Kev. I don't know. They all use different metrics. I like using total return. Seeking Alpha is good. Dividend channel is good as well. Pat, you're right on time, buddy. We've got a little bit of time. So what do you guys want to look up? Share any questions you have, anything you're thinking of buying, selling. At my age, VU would be a good benchmark, and it would. And that's why I'm keeping, speak of the devil, I see Ryan just popped in. As we keep, I want to keep the REIT exposure. I want real estate exposure. I don't want to go crazy with it because I'm still in wealth accumulation mode, not in wealth preservation, but I have it in the self-directed IRA, right? So any dividends, don't have to worry about paying taxes on that till many years down the line. But Pat, you got to spell it right because it's like a dear cub we lost, Ryan Williams, who is Ryan's namesake is after that. So yeah, I don't know if you saw Ryan. Andrew has $100,000 portfolio net worth or value, not net worth, maybe portfolio value. So dude, I cheers them. We toasted. I'll cheers you. I was telling all the people that are watching that I don't think I've watched one of your videos in 2 weeks. And like today, I'm doing stuff. I'm busy. I'm doing my stuff and family. And on my phone, I'll see your alert come up and I'll say, sweet. I'm going to watch that in a little bit. And then it's 2 days later. And all of a sudden, then it's like another Ryan video. I'm like, I'm down on 2. So yeah, that was good. But what else? I don't know. Somebody say something. We'll just play the staring game. So we talked about what I'm buying. I'm buying more Agree Realty, right? I don't know if you guys are buying REITs. What do you think? Wealth preservation mode versus wealth accumulation mode. If you're in wealth accumulation, do you even need any REITs? Should it be 100% growth? Do you need to reinvest any dividends or anything like that? That's what I'd like to... yeah, I know. And that's what I said. Ryan and I, we talk at least every week, a little bit here and there. So Bill's got 25 Palantir. And again, dude, they may keep going up, but a price to sales of 120 is, to me, that's another stratosphere. Well, no, that's not right, right? Because there's only one stratosphere. What do we got? We got the ionosphere. There's the stratosphere. There's the blogosphere. So I think it's past the blogosphere for sure. Well, I'll give you my thought. I don't know what's going to happen, but I think a lot of the REITs are going to go up. I think all the dividend stocks that were abandoned, right? It just makes sense. Yield hungry investors, when you can get the same or better yield from the risk-free treasury, you're going to take it because, yeah, you don't have the capital appreciation. But again, if you're in wealth preservation mode and you're worried about your principal eroding, then yeah, you get the treasury, right? Because it's safe. Oh, Steve, are there any very safe stocks with 5% div? Let's look. Oops, apparently I'm inviting guests to the studio. But I want to share my screen with all y'all. Since you asked Steve, I think we can go to screener. Live look in, everybody. We'll do, what do we want to do again? All right. We'll do dividend safety. Oh, you said, let me look. Steve, you said safe, very safe with 5% and up. Okay, here we go. So dividend safety, we'll tick on just very safe, get 180 matches. And dividend yield, you wanted being 5% and up. No matches, Steve. I'm sorry. Thanks for playing. You lose. Now let's drop it a little for you. How about 4? We got 9 at 4. Can we go 4.5 for a happy medium? 2. Look at that. Who said they're buying General Mills? Somebody's a smarty smarterson. General Mills has 4.91. Super slow dividend growth, though. And Rexford Industrial Realty. I know, Ryan, you've talked about Rexford, ticker REXR. And both of those, yeah, are undervalued. So there you go, Steve. You got 2 that are very safe with an almost, if you round, right? If you squint and round, then they'll be 5%. Wave the magic wand. They're 5% for you, my friend. Bubble Vinci's your only REIT. Yeah, and I think that's the way I'm heading, is that I'll only have Vinci and Agree Realty. And again, there's nothing wrong with Realty Income. It's just that I think it will continue to outperform, or I think Realty Income will continue to underperform anywhere from slightly to a little bit more than slightly its peers. It may not. It's my guess. I think Vici Properties and Agree Realty have a bigger runway for growth. I think they'll be able to grow their dividend faster, and the share price will appreciate a little bit better. But yeah, compared to like VOO, probably not. So I love it. Ryan was given his own ratings. Hey, you could give your own very safe. Dude, just there you go. You got your Snap Stock ratings. Stamp of approval from Ryan. Buffett is, yeah, I did read that. Buffett, it's 2 T's. Let's give the man, he earned that second T. And I'll drink some tea while you're throwing that tea on there. But yeah, I did read that he owns more T-bills than anyone. What are they doing with it? I don't know. Maybe they're loading the elephant gun for Greg Abel. I'm sure Warren has been thinking about this decision for a bit. And Bill, you refuse to buy Palantir since September. It's been very overvalued. I thought so too. And all it does is keep going up. I thought it was overvalued at $60. Here we are, just miles and miles above that. You know, that's funny. I didn't catch Ian's latest video either. Neither. I think. So that's right up his alley. I know he's buying General Mills and he's also buying more Campbell's Soup. but to each their own. And I think I talked about it on the conversation, Ryan, I had where I said that, yeah, they did exit T-Mobile. I don't know what. I said about Ian that I think he sometimes is shifting heavily into the higher yield, lower growth, and not focusing on total return. And there's not a damn thing wrong with it. The only thing that matters is that your investments allow you to sleep well at night and they meet your financial needs. It's all that matters. Damn the torpedoes, to hell with everyone else. Oh, Billy, you own Rexford. How long have you owned Rexford? Yeah, we'll look at Lowe's, Jason. That's you got the Lowe's down there. I like Menards. I don't know if you guys are fans of Menards. I don't know if you got Menards out by you, but you save big money. You'll save big money when you shop Menards. You got to love that song. Talk about a cult. I think that's a mind control song because I don't know. I'll just start singing it. It's one of those earworms. Yeah, anyway, let's look up Jason real quick. We didn't know he was going to sing the Menard song. And we make myself small. Don't be small. Be tall. What are we looking up, Jason? Lowe's. Here we are looking at Lowe's. I love it. I hope somebody just tuned in and they're like, this guy doesn't even know how to pronounce the company's names. We're looking at Lowe's in the Consumer Discretionary. So yeah, dividend safety score of 93. $252. I remember that when that was closer to 200. Did he say 200? Yep, 100 with the T. Looks like it's overvalued according to Simply Safe. Let's look at some other metrics for them. For them guys over there at Lowe's. 64 years dividend growth streak. They are, I believe, a dividend king, although they are slowing that dividend growth down. Very, very slow as of late. You got to see what's up with that. When are they going X? Sorry. I don't expect you guys to read that quick. X dividend, October 23rd. Looks to be overvalued. So you might want to wait for a pullback. And the way that Simply Safe does this, let me zoom in. The gray shaded area is the 5-year trailing price to earnings ratio, 10% above and 10% below that number to give it an expected range. And when it's above that, the share price will usually come down. So it means wait. And when it's below that, it means it's a good time to buy because the share price is probably going to come back up. So that's where you get that expected price of 201 to 246. So according to Simply Safe, they're thinking you should wait for it to drop at least another, $10 or so. So yeah, it's run up. It's run up nice. Looks to be, a little overvalued, I suppose. But let's get to those metrics, those fundamentals, that ROIC. I want to see it. Free cash flow payout ratio. Looks like it could be 28%. I like seeing that. Lower the better. Stable earnings payout ratio, as Kevin Burgess likes to see. He likes to see it stable, declining if possible. Earnings per share. Yeah, free cash flow per share. Look at that. Could be all-time high. Wow. Could be $17.10 next year over the next 12 months. Again, this next 12 months number is just an estimate. Why? Well, because nobody knows the future. I hope that isn't breaking news for you. If it is, you might not want to be investing just quite yet. Because what do they say? There's two kinds of people, those that don't know the future and those that don't know that they don't know the future. Meaning, nobody knows the future. Negative sales growth, though, interesting. Looks like that might improve. Total sales, I don't like seeing that. Hit a plateau and it's been declining. Keep an eye on that. Shares outstanding being bought back could help boost that share price just a little bit because, right, there's less shares to spread those earnings over. So it at least stabilizes the share price. The Yeah, return on invested capital. I think you said it was rising, Ryan, right? This shows it falling, unless they're wrong. It's been declining, but it's still very high. That's very, very high, 32%. Negative return on equity. That just means they might be paying out more in dividends. So, yeah, Starbucks, it's not always a negative with companies that are that strong. Margins, yeah, flat to compressing a little bit. And looks like they have no net debt. And their interest coverage ratio, remember, everybody, if you're new and you don't know what the ICR is, it's an important number. This tells us, I know it sounds like a broken record, how many dollars of operating income or EBIT, earnings before interest and taxes, does a company have to cover every $1 of interest on the debt? You have to pay the interest on the debt. If you can't cover the interest on the debt, your company's in trouble. And that dividend's going away. It's going to be cut, brought to zero. There's going to be drastic moves made. So you like to see a little bit of wiggle room. Simply Safe wants over 8. This gives us, again, falling margins, higher interest rates, sales down for a little bit, maybe companies not as profitable. So you want a good interest coverage ratio. And currently Lowe's has $7.18 of operating income or EBIT, earnings before interest and taxes, to cover every $1 easily of interest on that debt. Whew, how about that? Oh, Adam. Oh, yeah, cool. We could do that, LTL. LTL 5275, just for you. Bernard, that's, yeah, give it 1 second, LTL. Less than truckload, we'll call you. Michael, I wanted to hit that comment too. You came into some cash, you were looking to get divvies to bring in income, but it's hard as the market looks maxed. But dude, we don't know that. I mean, the market's always going to go up. It's going to go. I fully expect it to be higher from here in the future. Now, could it go lower? Of course. But as companies become more profitable, they're buying back stock. We know that's helping to keep prices high. I don't know when. I don't know what the catalyst will be to send the market lower and to stay lower. But I don't know. It could go up 20% more from here and then fall 20%, and then we're right back where we started. So who knows? Bernard, I don't know much about you, but I'd love to know if you are in wealth accumulation or wealth preservation mode, because I don't know, man. SCHG, if you got a lot of years ahead of you, you might want to also hang out in growth. Oh, Adam, nothing allows you to sleep well at night. Well, at least you're sleeping, right? Still sing the Fig Newton jingle. I don't even remember the Fig Newton jingle. Oh, look at this, Janice. You see, the universe somehow always brings it right back full circle, because you live in Eau Claire, Wisconsin. I almost said it wrong. Eau Claire, Wisconsin. Yeah, hater, you live in Eau Claire, Wisconsin, the home of Menards. All right, everything there is Menards. Yeah, they give you the Menards vest when you're born, right? It's a rite of passage. All right, let's look at the... Yeah, that was Yogi Berra. All right. Here we go. You wanted the updated portfolio. You asked, my friend, you shall receive. But after I make myself small, sorry. Now I can go back here. So again, this is 3 portfolios combined. This is a self-directed IRA, a Roth IRA, and the taxable, which is our overflow account. And I've done some selling. Everyone, I've had to pay a few bills. Kids are going back to school. We've had some, I guess I should say, expenses I didn't plan very well for. So I've had to pull some money out of the taxable account, the overflow, because I don't want to pay 22% interest on the credit card. That money will eventually go back, but right now, life happens. You know, it's not coming out of retirement accounts or anything like that. So some of the yield on cost, the income, it's going a little wonky, but, you know, later in the year, when things settle down a little bit, dude, my kids are playing flag football. We had to buy equipment for them, waivers and stuff for that. Again, school fees, books, you know, we've had to do some spending of money, and Yeah, so I've had to pull some Skrilla, as the kids say. But all right, up to what should we sort it by? How about we sort it by how about percent gain? Start at the top, which is still Soxel, right? Again, you can see here it's only 10 shares of Soxel, but I do have those at $9.50. Yeah, I wish I would have bought 100 shares. I had the money to do it, but I chickened out. I was doing a little experiment, so it's worked out well. AbbVie is next, 139% gain. And yeah, it's it's growing. ExxonMobil still at the top. I haven't bought any of them in a while, so it's interesting. Some of the positions over 100%. Harrow Incorporated still over 100%. They don't pay a dividend. One of the ones that doesn't. And let's see. Yeah, Maine, McDonald's, I still got. If I ever need more cash or Costco ever goes really low, McDonald's I might sell. Lockheed Martin I might sell. Only 10 shares of each of those. So not significant positions, but, sitting on nice gains. And McDonald's giving us $70 a year. Lockheed 132. Visa 35 shares. I want to add more. Looks like it could be reasonably valued, they say. Sorry if this is really small, but almost done here. Ares Capital. Yeah, I like them. Bought 10 more shares, 415 of that. Recently I did. And there you go. Agree Realty. I should do percent of portfolio. Why did I do by gain or loss? Here. Percent of portfolio. If you want to know the biggest, there it is. Schwab SCHD at 10.7%. And Zoetis, 10.2%. 101 shares of Zoetis. And look at this. Down 0.1%. I'm holding it for the long time. But our cost per share, 154.28. And the number 3 biggest, again, this does not include our 401k. This is just what we have at Schwab because I can't link my 401k to this. And I Agree Realty. There you go. Oh, I do the monthly update videos. So just scan through this a little bit. 100 shares of Nike still got. There's our 100 shares of Realty Income. And that, depending on what the market does, this may change that week and I may be out of them fully. But they do look undervalued, right? And Agree looks reasonably valued. So take for that what you will. SCHY, I'm up to 120 shares. That's nice. And that's about that. So there's the portfolio. I mean, if you really wanted to peep in on a little more, just, pause the video, I guess. Zoom in. I try to, man. I try to. That's interesting. Ryder, also a publicly traded company. I think it's ticker R, I believe. Let me see. Is Ryder R? Ryder is R, and it looks to be way overvalued. That's interesting one. Do you own any of your own stock in Ryder? But lackluster truck rental income. That's good to know, man. That is good to know. Michael being funny. That's another Yogi Berra quote. Some restaurant he went to was so crowded, nobody goes there anymore. Big money. Yeah. You never know what you get here. Like we started it out saying it's a situation. I'm a guy in a chair. I don't know how the story's going to end. I'm just along for the ride like you are. All right, let's see what else you guys are saying here as we're landing the plane. Yeah, great job with ABV. ABBV, not Ambev, I think, right? Thanks, Billy, we try to be, but it's painful, man. It is damn painful. I told my wife, I pulled 1,500, and that's part of the Starbucks money that we still had sitting there. And so I didn't technically sell anything additional, but I'm looking at it, and sometimes I've gotten a little too excited, and we'll have money sitting in the checking account, and I'll be like, taxable, buy, taxable account, buy, taxable account, buy, and then again, some bill like this that I didn't plan for comes up, and I'm like, cripes, I think I'm gonna have to sell something, but it's fine. Basically, the overflow account is the taxable. It's kind of treated like an emergency fund of sorts, right? Not a smart idea, but it is what it is. So All right, Doc, you made it. Good. Yeah, pretty much, Ryan. They're small. I'm up a lot on them. I've had trouble adding to them, so that's probably why. I mean, they're ancillary positions, so if I ever need the money, I would have a much easier time parting with them because, if they go way up, way down, it's not really moving the needle. So kind of like Charlie would say, if you have really small positions, it just doesn't move the needle. So I appreciate that, Blaze. Yeah, I'm trying. I'm learning, still taking some stabs. And yeah, we'll end with this. So the predictions for tomorrow. I love it, Ryan. He does what I don't do. I'll tell you, here's my prediction. I think the market's going to go up, but I could also see it going down. And, there's also some scenarios tomorrow where if we're not up or we're not down, I could also see it just chopping sideways as well. Yeah, thank you, Pat. That's what I was getting at, up, down, or flat. And we'll call you up, down, or flat, Pat, and we'll end with that. So, again, ladies and gentlemen, boys and girls, what is he doing? I don't know. Thank you. I really do enjoy this. It's so much fun. I look forward to it. Hopefully Kevin's live tomorrow. You guys can tune into him. And yeah, Ryan, I'll get you that video right now. I'm gonna watch your latest video and shoot you a comment, see what you're talking about there. So everybody, go to Ryan's channel, watch his latest video, have some fun with it, and yeah, I'll see you guys there.